Curious if the next decade will be a boom or bust for Australia's economy. In this clip from my Mastering the Markets class, I break down the hidden market cycles driving real estate and stocks and reveal why timing matters more than ever. Watch now to get ahead of the curve and master the market before everyone else does.
We have a starting point, okay? So every cycle has a starting point, every cycle has an ending point. What Omar was telling us was that Australia is slightly behind that, okay? So, for example, he had suggested that some of the places had their lows or their cycle starting points in 2013. Okay, so if we go forward, so 2013 plus 18.6, if we go forward 18.6 years, that would take us out to 2031. Okay, 2031 for a load, or 2032 if you stretch it out. He also mentioned that some other cities, I don't know, I can't remember off the top of my head whether it was Sydney or whatnot, started their cycle lows in 2015. Okay, that means that they're going to go out to like 2035. Okay, this obviously doesn't intertwine itself with the global market. This is kind of Australia's unique cycle. I'm more on the side of erring with the side of caution and saying that possibly within like the next 18 months, you know, so that, and that basically it's July now, so I shouldn't keep saying 18 months. Let's just say like 14, 13 months. So out to the end of, say, 2026 or mid-26 to, say, start of 2027, that I'll be looking for this market to basically top out from a stock market perspective and also from the US property market. I would be watching definitely for that US property market to top out and start to crash. You'd see that in the American REITs, for example, real estate investment trusts, and you'd also see that in the Aussie investment trust, the real estate investment trust. What they say is that the real estate investment trust, the REITs, okay, so you track it for whatever country you're looking at, wherever you're watching this from, and the REITs should top out anywhere from, well, I should say, let's just be a bit more modest here, anywhere from 3 to 18 months before the stocks do. So if you see that the REITs have sort of come up and now they're sort of tracking lower, they're not really doing anything and sort of falling off, then basically you'd count forward and you'd build your time frame of 3 to 18 months out to experience your country's economic downturn. So for example, if you were looking at China, if you're looking at Taiwan, etc., you would first follow the REITs. Now the reason for that is because the real estate market generally in most countries is the biggest market in the country. Okay, billions, trillions of dollars is in that market.